Welcome to the Transparent FX Academy. I'm Nick, and I'm a top author and TradingView with over 190k reputation points.
In this video, I will be speaking about gold. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect for this market. Then we will be moving to the order flow by looking at the commitment of traders, so the COT data, which is essentially what the big players in the market are doing and how they're moving and shifting their orders. And by the end of the video, by using a combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here for this pair. So this is definitely a video you do not want to miss.
If you're new to the channel, make sure to subscribe. This is the place to be for high quality, free trading education. Now, without further ado, let's jump straight onto the charts.
Now, starting here from the monthly time frame, what we can see is that at the moment we have a market which is rejecting to the upside a quite strong historical monthly support and demand to the upside. In fact, what we can see is that this level was previously acting as supply and resistance, preceding all these rejections to the downside. Then the market broke above that zone, and all that previous resistance and supply was turned support and demand exactly here after the market broke it to the upside with this impulse. And when you have a very strong historical resistance zone, which the market has already respected as resistance in multiple occasions, what you expect at that point is a break to the upside, and after the break, the retest and the continuation to the upside, which is in fact exactly what the market is currently doing. So if we look at what we have here from a monthly standpoint, it is clear how we now have a strong uptrend with the creation of new higher highs and at the same time new higher lows. So the monthly time frame does seem quite bullish, and more bullish price action away from this level could be expected from a monthly standpoint. Now, if we drop down on the weekly time frame, what do we see? Now, here in the weekly, we can see how after the creation of this strong impulse phase to the upside, the market entered inside of this consolidation period in the form of this triangle formation. So we had a market which essentially at the same time was creating both lower highs and also higher lows. So at some point when you have a triangle formation, you expect a breakout to the upside. So if you are already into an uptrend after such a consolidation, what you naturally expect at that point is the breakout to the upside, which is in fact exactly what the market is currently doing. So in a situation like this, also here on the weekly time frame, more bullish price action seems possible. Dropping down on the daily time frame, what do we see? Now, from a daily standpoint, I did speak about gold quite a few times in the past. I spoke about it after the market created this M pattern. I explained all the reasons for which from here there was a good probability of seeing this potential rejection to the upside. And in fact, that is exactly what the market did. Then again, after the market created this impulse to the upside and correction, I made a full breakdown explaining all the reasons for which there was a good probability of seeing this rejection to the upside. And again, that is exactly what the market did. Again, after this impulse, when the market was here, I made yet another breakdown explaining why I was expecting a correction and then a potential push higher. And again, the market gave us. And with the very last analysis just a few days ago, I explained all the reasons for which I was expecting the market to retest this level and then to reject it to the upside, which again is exactly what the market did. And by the way, I will link in description all these previous analysis so you can go and check them out for more free education. But at the moment, what kind of structure we have? Well, before we go into more details on what we have here from a daily perspective on gold, first, let's go and see what we have when it comes to the commitment of traders. So what the big players in the market are doing on gold. Now, what we can notice here is that with the last reports, net positions have been massively increased. We went from having 247.6k net positions all the way up to having 300.7k net positions. So we had a massive increase of the net positioning, showing how institutions have been moving back to the bullish side for gold, therefore making it stronger. With 24,700 longs added just with the last report on gold, therefore making it very strong. Now, let's keep all of this in mind and move back to the chart. And by the way, If you still haven't, make sure that you join my free Telegram channel, which you find linked in description, so you never miss new updates. Now back to the analysis. So in a situation like this, here on the daily, what we can notice is that the market is testing resistance. From here, all this previous rejection to the downside was created, and at the moment the market just tested the same zone, and it seems to be finding some resistance, which is obviously what you would expect. Since this was a very strong previous supplied zone, you expect the market, once it reaches the same zone, to find some resistance at the level. So only if the market would actually manage to break above this level, only at that point things would get interesting. So only if the market would manage to break above the resistance, at that point, similarly to what we have already seen on the monthly, this previous resistance zone would become support. So after a break on the retest of the previous resistance turn support, this is where there is good probability of seeing even more institutional longing, since already we're currently sitting with 337,000 longs compared to only 36,000 shorts from an institutional perspective on gold. And at that point, there is the possibility to see even more institutional longing, further increasing the probabilities of a potential rejection to the upside away from this level. So if we do get a break and retest, at that point, what would I expect? Well, as usual, trading is reactive and not predictive. The monthly, weekly, and daily timeframes combined with the COT data, those are the best timeframes when it comes to the directional aspect of the market. However, when it comes to identifying early shifts in the trend of a market, the best timeframes for that are the intraday timeframes, so 4 hour and lower. Therefore, what I would expect is that if this market would shift from an intraday bearish to bullish market, I wouldn't be surprised to see a potential rejection to the upside for the market to complete this daily impulse correction and impulse pattern to the upside. That definitely wouldn't surprise me. Now, all these general analysis, tutorials, and concepts that you see me speak about on my YouTube channel are really just the tip of the iceberg, because if you really want to learn more, I will definitely suggest that you go and check out the transparentfxtrading.com website, which you find also linked in description. Here, you will have the possibility to gain access to all my courses. So really complete courses that will guide you from the very basics of charting all the way up to more advanced concepts like building algorithmic trading strategies using quantitative finance tools like the quant analyzer to build portfolios of strategies, and a lot of really important and really interesting things that you need to know if you want to become a better trader. So this is something you really cannot afford to miss. You also have the possibility to gain access to the trading station software with the Telegram notifications integration, one-on-one mentoring directly with me, the COT data software that you often see me use on the YouTube channel, and you also have the possibility to integrate with gaining access to all my EAs, so my personal EAs, the ones that I have developed and that I trade on my own account, and also to have access to the trading show, which is essentially a live stream of all trades coming from my account directly on the Telegram channel as they are executed and managed. Here on the website, you will see that there is the complete presentation of all the EAs that I personally run. And if you continue to scroll down, you will see that you have the possibility to join and gain automatically access with the email and password that you will create during the checkout process. And there is also per time slot this special discount. So at the moment, there are 10 days before the next price increase. So I would really suggest that you go and check it out as soon as possible. The link is in description, and I will see you in it. If you enjoyed the video, make sure to drop a like. Also, let me know in the comments below any pairs or topics that you would like me to cover in the next videos, and I will see you in my next breakdown.